On today's World Insight with Tian Wei, the London Stock Exchange refuses a takeover offer from its Hong Kong rival. How will this proposal impact the unrest in both financial hubs? And amid the gloomy outlook for China-U.S. ties, an American at the heart of the relationship uncovers reasons for optimism.
These tariffs is leading to economic slowdowns in both China and the United States.
Here is our host, Tian Wei.
Hello and welcome to World Insight, coming to you live from Beijing on CGTN. We begin today's program with the London Stock Exchange. Last Friday, it announced it would refuse the $39 billion offer from the Hong Kong Stock Exchange to consolidate the two financial hubs. It said the proposal was, quote, preliminary and highly conditional amid doubts about political risk and deal structure. The London Stock Exchange has long sought to bolster its presence, according to itself, in Asia, and recently launched a link scheme with Hong Kong Stock Exchange competitor in Shanghai. Let's take a look at how complicated the whole picture is. It's really fun.
The London Stock Exchange says it sees no need to further engage with the Hong Kong Stock Exchange, after the Hong Kong rival said it would press on with an offer to take over the London bourse. This came after the London Exchange refused an unsolicited offer from Hong Kong, citing concerns over key aspects of the conditional proposal, including strategy, deliverability, form of consideration, and value. LSE's chair Don Robert criticized Hong Kong EX's chairman Laura Cha and CEO Li Xiaojia about the decision by the Hong Kong Exchange to publish the unsolicited proposal within 2 days of receiving it. He added that it represents a significant backward step for the LSE group in combining with the Hong Kong Exchange. It was the highest ever takeover offer for a stock exchange, valued at about $36 billion US. However, the board of the Hong Kong Stock Exchange says the merger with the London Stock Exchange could create a global market infrastructure leader. The surprise bid comes amid political uncertainty hovering over the UK due to its pending exit from the European Union and ongoing protests in Hong Kong. So what does that mean to Hong Kong's economy?
I guess the question is more than just the Hong Kong economy. For more on the Hong Kong Stock Exchange offer to the London Stock Exchange, in Hong Kong we have Ronald Wan, Chief Executive at the Partners Capital International. Joining us in Brussels in Europe, we have Carol Lanoux, who is the Chief Executive of the Center for European Policy Studies and also has been quite active in the financial analysis circle. In our Beijing studio, last but not least, Liu Zhiqian, Senior Fellow at the Chongyang Institute for Financial Studies from Renmin University of China. Gentlemen, welcome to our program. First of all, Mr. Van, going to you. It's much more complicated than just a proposal and refusal of the proposal. What exactly is the real essence you are seeing in both the possible to bid and the interaction so far?
Yes, I think this strategic acquisition made by Hong Kong Stock Exchange is very carefully planned, because the Hong Kong Stock Exchange wants to maintain its status and its competitiveness as the international financial center of China. So actually, it's also hope to build an offshore platform by acquiring London Stock Exchange, and also to build up a 24-hour trading circle so that Chinese company can tap both Hong Kong stock market and London stock market. This is a very clever move for the Hong Kong Stock Exchange. Of course, the timing is very sensitive, because Hong Kong is facing a lot of competitions, both internationally and also domestically. And from the perspective of London Stock Exchange, I can understand that, because they want to maintain their independence in the first place, and also they're not sure whether Hong Kong is the platform, for them to work with China. So I think the things are very complicated. So everyone want to work for a good deals and also work for the best deal for each other. And how to create a synergy, in fact, I think it is need to see.
Yeah, it is. We will have to wait and see. Nothing is yet certain at this point. That's why it's a lot of fun going on in this real story. Mr. Lanoux, what do you make of the recent tango you see between the London Stock Exchange and the Hong Kong Stock Exchange, it's not just about just a deal. It's a lot of things behind it, Mr. Lanu.
Yes, of course it is, as the previous speaker was saying. Let's say it's a tie-up between two of the most important financial centers in the world, and by this overcome kind of the limitations which they have because of the time zone in which they are placed. But of course we know, let's say, there are political problems on both sides as well in the UK as in Hong Kong, which makes it even more kind of difficult, let's say, to above all to sell this deal. But let me look, let's say, basically at the business case of both deals. Look at what London has done over the last 10 or 15 years, how London has grown. Certainly the London Stock Exchange, not only London as a financial center, but also the London Stock Exchange as the most operator in Europe, also through acquisition of the Italian Stock Exchange, its stake also in the major CCP in Europe, which is the London Clearing House. And then now they had planned, let's say, to have an acquisition of Refinitiv to move into the data business even more than they are already. So they were already had a clear strategy, and all of a sudden comes this takeover from Hong Kong, from a partner which they basically on itself couldn't refuse, because everybody knows that Asia is the future, and certainly for London, Hong Kong has a special status. So having a major kind of partner in Asia would be an enormous step forward. So
that's right.
It is all of a sudden adds to an extremely complex situation where they were already in this Refinitiv deal, basically the former Thomson Reuters business, and then in addition all of a sudden comes this Asia dimension. So if I were to be a shareholder, it would be very puzzling for me whether I would choose the one or the other.
Mr. Lanu, the details that you brought up is extremely exciting, because Refinitiv, you know, this specific company, when it comes to acquisition of that, the argument from the London Stock Exchange shareholders is that it's going to add more possibility for London Stock Exchange to operate in emerging economies and attract attention from emerging economy capital, certainly as well. But then if a merger or acquisition could happen with the Hong Kong Stock Exchange, that's going to be much more direct when it comes to you know, a share of the emerging market. So Mr. Wan, I want to come back to you about that. This is exactly one of the most important things in this whatever bid or offer to bid or proposal to bid. This is the real thing here, Mr. Wan.
I think this is the real thing. I think the Hong Kong Stock Exchange is working on it seriously, and they have some time. You know, even though the London Stock Exchange, the board of directors reject the offer, still the Hong Kong Stock Exchange can bid, you know, early in October. How they going to finance the transaction? It basically is a cash offer. No, it's look very attractive to the London Stock Exchange, the shareholders. They are talking to the shareholders of the London Stock Exchange as well. But when you talk about this financial aspect, financial burden to the Hong Kong Stock Exchange, it's still yet to see. You know, how they're going to work out the synergy between both you know, stock exchange. How to create something which Hong Kong Stock Exchange can deliver to the London Stock Exchange, because Hong Kong Stock Exchange acquired London Metal Exchange in a couple of years ago, and it is yet to bring the China element to the exchange itself. So London Stock Exchange, and this time, you know, will need something really solid, and how to help the London Stock Exchange to tap into the China market. This is something which we need to look at very closely, and how they're going to materialize everything carefully.
Exactly. Let me also have also Mr. Liu sitting here with us in the Beijing studio. You see the desire from both sides. Now, London Stock Exchange want to have more possibilities, certainly here in the emerging markets. Asia, of course, big part of it, whether it's Shanghai or Hong Kong, you name it. Meanwhile, Hong Kong Stock Exchange is not like it's nobody. It's a very big and strong stock exchange in Asia. Meanwhile, it just acquired LME. So it's not that it's not knowing what it's doing, but rather it knows very well. Only the timing is interesting. So let me ask you, Mr. Liu, about this. What does it mean at this point, the attractiveness of the emerging markets for stock exchanges around the world that reflected in this quite a bit drama just over the past 1 week between the two exchanges?
When we are talking about this business action, we have to say another word, that if we can see whether this merger is a value-added merger. I think the desire from Hong Kong Stock Exchange is a value added to buy or to take over the London security stock market. This is a very cautious, a very aggressive desire for Hong Kong stock market.
So you don't think it's so-called abrupt, just like the board of the London Stock Exchange said?
No, I don't think, because this is a long time for Hong Kong stock market to have such a desire, as we know that. Because we have to understand what's the difference between Hong Kong stock market and the London stock market, which is strong point for each. The London stock market is very famous in the fixed income and also monetary market. But the Hong Kong market is mainly in the derivative products and also IPO market, especially for emerging market. If the both sides combined together, we can see how big, how important they will play in the world market, in the stock and the capital market, especially. So in this way, we can see such action could be realized if possible, that it could good driving force for London and for China, also for Asia countries.
That's right. Mr. Lanu, that is the thing here, that some people only think about it politically, looking at, you know, the Brexit situation of the UK or the so-called unrest here in Hong Kong. But business is business, and it's a serious business that we are talking about here. So I want to have your comment here, Mr. Lanu. What do you think could be the in the future, the prospect of this, whether offer or not, whether bid or not? Some even say it could be a possibility of a hostile takeover if the conditions were ripe. What do you say from your perspective?
I think personally, I think both possibilities make sense. I mean, so what London planned to do is to take over Refinitiv. I mean, that's already on the cards, but must be approved. That makes a lot of sense, because the data business is the financial data business is where a lot of growth is expected. And we know there's basically only one big operator in the world apart from Refinitiv or Thomson Reuters, and it's Bloomberg. So this is a growth market, and there will be need for more data in the years to come. Of course, if you have, on the other hand, the possibility to expand to Asia, as was just explained, in the sense that you have a market there which has more in IPO and equity, and then the London market has other specialization, purely its core trading platform business, that also makes sense. And on top of that, let's say the financial value for the takeover from the Hong Kong Stock Exchange is higher than probably the risk of the takeover of Refinitiv, which will be, very costly for the London Stock Exchange. Yes, then you have to compare both offers. But of course, what you cannot underestimate, certainly from a European perspective, is the political risk, not only because of Hong Kong, but also because of the overall kind of business climate in China. Will there be a full freedom if Hong Kong takes over London in the way London is supposed to operate until today? Will there be a full freedom of operating of the exchange in the future? Of course, for this we have an international law, we have principles like equivalence, just to make sure that the regulatory environments are the same on both sides.
Right.
But I think if you were to ask Europeans here in Brussels or all over Europe, specialists, many would have great doubts in the way, how independent the way is in which the Hong Kong Stock Exchange is functioning, or how independent the supervisory body of the Hong Kong Stock Exchange is, and whether it's basically, if something doesn't please China, that China will intervene in favor of its own interest if something is happening on the Hong Kong Stock Exchange.
All right. So,
and that is the thing which I see from European perspective. Of course, it's on top of that, as you were saying, it's a hostile takeover on top of that, and the current CEO will prefer to remain the CEO of the London Stock Exchange rather than to have a CEO of Hong Kong.
Yes. Well, those are certainly details, but the details also matter from time to time when it comes to such a possibility. But let me ask you, Mr. Liu. Now, Mr. Lanu, just to voice some concerns of some investors, and also from those that are shareholders of the London Stock Exchange, whether the stock market and the stock exchanges will remain its independence, free from political influence, whether it's one kind or another. So, Mr. Liu, what do you make of concerns such as those expressed by Mr. Lanu? Certainly, those are also shared by some of the others. Mr. Liu.
I think this concern is not surprising us because we know such concern existing already for some time, especially in recent times of when the riots happened in Hong Kong. But actually, I have to say frankly that all this so-called government interference from the mainland to Hong Kong Stock Exchange has never happened, as we know that, because Hong Kong Stock Exchange is still independent. Right. It has been operating under its own law and rule regulation. That's why Hong Kong Stock Exchange has so good confidence and faith in the world market. Many investors are coming to Hong Kong to have more invested. So this is the real reason that the Hong Kong Stock Exchange can be existing so strongly and very actively and positively in the history. Nowadays, if the merger with the London Stock Exchange, I think nothing will happen because the mainland is happy to see the progress for both sides, and no reason, no need to interfere in all this business, especially in the business.
People would say, oh, what about the competition between, let's just say, Shanghai Stock Exchange, Shenzhen Stock Exchange with that of Hong Kong? Will that be one reason for anybody to intervene?
No, I think the competition is a word from Western business circle. It's welcomed by all over the world. Competition is not a problem, but how to compete is another question. But actually in China, we are still abiding all the international law to have a fair competition, transparent, and in fairness. So this is the very important precondition for all markets, especially for China also.
I see. Mr. Liu, certainly talking about the important aspirations. Let me go to you, Mr. Van, about that, the Hong Kong Stock Exchange, how it operates. Just as many of the issues related to the one country, two systems. And whether people should have much hope and confidence in the operation and the future of the Hong Kong Stock Exchange, which is a very important stock exchange here in Asia, to say the least. Mr. Van, you go ahead with your understanding as an investor.
Yes, Hong Kong is a special administrative region of China, of course. But Hong Kong Stock Exchange is an independently run stock exchange. Even though Hong Kong, as our government, is the largest shareholders, but still, I don't think that government interfere in the operation of the stock exchange rules and regulations. Of course, we also see that Hong Kong has an advantage over other international financial centers in China because Hong Kong has no foreign exchange control for the time being. So basically, Hong Kong Stock Exchange want to maintain its competitiveness as a global financial center and a fund IPO center as well. So it basically run autonomously and also without interfere from the government, and it's very commercially minded, basically geared towards full operation as a listed company, and it is wholly accountable to the shareholders and investors all over the world. So basically, I think its acquisition proposal, basically, is part of its expansion plan. I think it is purely commercial. Of course, this can help China and Hong Kong as well. That is a side benefit of the proposal. It's a all-win situation for everyone.
That's right. Mr. Van, if I could just very briefly from you also, but the other way could also be a concern, whether whether London Stock Exchange will have some kinds of political interference from certain governments or from certain political forces from either Europe or other parts of the world, you know what I'm talking about, in terms of working on a real, pure business deal. Are you concerned from Hong Kong?
Yes, actually, I think this transaction, from Hong Kong's perspective, is purely commercial. But when you talk about London, well, it has interference, from the government and from other cross-border regulatory bodies. And I think that some, investors, some regulatory bodies in the States or even in UK, we think that it is a takeover from China's government. So I think that this sort of perceptions, this sort of interference will affect the success of the the acquisition proposal eventually. This is something which we need to care about.
That's exactly why we need to discuss it. Mr. Lanu, we have very limited time, 40 seconds for you also, just to be fair, to respond to that question. Whether should we be afraid of any political interference when it comes to London Stock Exchange attitudes about any possible deal with the Hong Kong Stock Exchange or others coming from the mainland?
Of course you can be afraid, because you see what is going on also from your perspective in London at the moment, and London wants to break away from the EU, wants to take back control, which is the UK government. And of course, if the UK government sees something like this happening, even if it were to be a huge contradiction, it may protect what they call the old lady. The old lady is the London Stock Exchange, the name which you often see in the newspapers in the UK. So it would be a contradiction in terms, because we know that Theresa May and also Boris Johnson are fully in favor of concluding free trade agreements all around the world.
Okay.
But if they see this happening, they may prefer to keep the London Stock Exchange in local hands.
Well, we'll see what's going to happen to the old ladies, as you say, quoting your word. The Hong Kong protests, though, have hit the city that we were talking about, the city of Hong Kong, where it really hurts economically. Earlier this month, global credit ratings agency Fitch downgraded the Hong Kong's rating one notch from AA+ to AA rather, effectively labeling it as a risky borrower. Bloomberg also reports in some of its media reports in the past 2 months, over $600 billion were erased from the stock market. Meanwhile, the city's second quarter GDP for 2019 shrank almost 0.5%, and multinational bank DBS forecasts Hong Kong's GDP for the year will remain flat at 0%. Now, those are the effects of some of the recent unrest going on in Hong Kong on its economy. We really hope that things will clear up in the very near future. Before we go, what is your immediate hope for this deal or no deal between the Hong Kong Stock Exchange and London Stock Exchange as investors and as analysts? Mr. Liu, you go first. Very briefly, 20 seconds for you, everyone. Mr. Liu.
I think this is a time for both sides to have a bargaining time. So we hope to find a good solution from both security stocks and market, because it will benefit the people of the two countries and also Asian countries.
I guess so. For all economies, as long as the two exchanges are also having win-win here. Mr. Van, 20 seconds.
I think this is a good deal. Yeah, okay, this is a good deal for all countries and all cities and also the exchange involved. Basically, I think as long as a viable commercial plan can be devised, I think this deal should go ahead, and it will create an open situation for all the countries and all the stock exchange and all the cities and involved. Yes.
A lot of wish over there, Mr. Samuel. 20 seconds as well.
No, for me, let's say both deals are interesting, the deal with Refinitiv or the deal with Hong Kong Stock Exchange. But the thing is, most important thing for me is it should be a wake-up call for Boris Johnson, that if you have, let's say, this ongoing, let's say, for a long time already, problems around will they leave the EU, yes or no, and the impact it has on the exchange rate. At the moment, let's say the pound sterling is valued very low. If it goes on like this, there will be many other companies in the UK which will be taken over, because their purchasing price is much lower than it should be. So let them think about the core issue, which is make sure that they know what to do with the EU and they have their economy right.
All right, one could tell that is the voice coming from Brussels. Thank you so much for the three of you joining us on this very interesting discussion. Thank you. Carol and Wu, round of one. Last but not least, Liu Zhiqing. Really appreciate it. Thank you, gentlemen.
Thank you.
You're watching World Insight with me, Tian Wei. Still to come on our live program. Amid the gloomy outlook for China-U.S. ties, an American at the heart of the relationship uncovers reasons for even optimism at this moment. Welcome back. You're still watching World Insight with me, Tian Wei. The program is coming to you live from Beijing. Next, we turn to China-U.S. trade tensions. A slew of concerted moves by Beijing and Washington in the past week. China will exempt U.S. soybeans and pork from additional tariffs, and it will support Chinese companies in buying U.S. farm produce. Before this, China had announced a list of 16 U.S. items to be excluded from the tariffs. At the same time, the U.S. has also announced a delay of additional tariffs on Chinese imports due to be levied in October. All these have fueled optimism for some degree for the next round of China-U.S. trade talks set for early next month. The conflict that started in March last year has not only hurt economies of both sides, but also disrupted global supply chains and rattled financial markets. Earlier, I had an exclusive interview with Steve Orleans, president of the U.S. National Committee on U.S.-China Relations. He discussed the improved negotiating environment and whether they will strike a deal under the current circumstances. For how long? Let's take a look. The issue of the trade negotiations, of course. Some look at that as an important hope for the two countries to still engage, at least to a certain extent, with one another. Others look at that as a flamboyant point with which the two countries' interests clash with one another. Mr. Orleans, what do you make of it?
I think the resolution of the trade negotiations will be determined by the political situation in the United States. If the president decides that reaching a deal with China is in his political interest, we will have a trade deal. Maybe in November, maybe in January, maybe in April, maybe in September, before the election. The other risk is that these tariffs is leading to economic slowdowns in both China and the United States. If history teaches us in American elections that if the economy is contracting, if it is in recession, the president, the party in power, will lose. So if the president and his advisors conclude that these tariffs are leading to economic slowdown in the United States, which is going to cost him the election in November of 2020, then we will see an agreement.
How important is this negotiation now in terms of the direction of bilateral relations? Is it as relevant, as important as many of us think?
You have to look over the horizon. If you look at the very short term, it's just incredibly frustrating because it changes from day to day. The Americans say the Chinese changed the deal in May. The Chinese say the Americans, it never was the deal, and the Americans changed it. So if you're involved in the everyday kind of back and forth of this, you can't make any kind of decision. But you have to look over the horizon in the long term. You heard at the forum people who were saying, look, we're investing in China for China, and we're continuing to invest. You had a German specialty chemical company, you had others who were sitting there, and we're not talking about hundreds of millions of dollars. We're talking about tens of billions of dollars.
If it's investing for China, about China, whether it's American companies or others, are we going to see a further decoupling of the two economies? And what would that mean? That means every company has to prepare two plans, at least one.
Well, it won't be decoupling for your ordinary manufactured goods. I don't think that is going to happen. But it could be decoupling from the technology side, which I think is it's bad for China, it's bad for the United States, and it's bad for the world. If you think about, the advances in technology, and if it's going to have to occur in the United States and in China separately, the additional cost, the additional friction that is added will slow those developments. Slowing those developments are bad for the people of the world and the people of China.
Now, a lot of this were done in the name of so-called national security. Right. I know you argued for a long time national security has been blown out of proportion in any argument about the United States' relationship with China. Will that trend continue?
It has to be fought against both in China and the United States. That China has an extremely expanded view of national security and blocks investments in that area. And now the United States, which used to have a very narrow definition of national security, is now expanding it. We've expanded it both legislatively, and the White House is now expanding it by making CFIUS a much tougher process. CFIUS, the Committee on Foreign Investment in the United States, the interagency body that reviews foreign investment in the United States, including including Chinese investment. But it's really damaging. And I think Tom Friedman today in his talk really talked about it very articulately, that this trust deficit and this creation of two ecosystems is really damaging to the world. That is really, really damaging. So what we need, what I called on people to do today, is I called on the business community to stand up and talk to both the Chinese government and the American government, saying, this is really bad. And if we go down this path, these separate paths, it's going to be hard to come back. So it's really damaging.
But do you think there is a possibility of that when you're saying encouraging the business community to speak out to both governments? Well, mainly the business community is more low-key in terms of advocating policies in whichever environment they're operating.
Yes, it's the business community in China is fearful of the #1 leader, and the business community in the United States is fearful of the president. So that's why in my speech I said, 提高我们的勇气. You know, be courageous. Because in the end, if you say, all right, short term this may hurt me, but long term, if you don't deal with these issues today, long term it's going to be devastating for the technology sector. So do I know where it's going to come out? No. But will I fight with every ounce of my energy to oppose this policy? Absolutely. And I call on everybody, both in China and the United States, to fight any of this decoupling. It's bad.
Stephen Orlean, longtime China observer Steve Orlean says that it will take a recession for the U.S. to end its trade war with China. To compound such a pessimistic prediction, he identifies global challenges that only a joint China-U.S. effort can overcome. However, amidst the gloom, Orlean spots a silver lining, best exemplified from the quote, "Only when it is dark enough you can see the stars." That's a quote he had then. So what does he mean by that? Let's listen in. There seems to be some pessimism in the air when it comes to both the mid and the longer-term potential of China-U.S. relations. For someone who's been with this relationship for 4 decades and still working on it, what do you make of this?
Well, the short-term pessimism I share. You know, I think we have false narratives in both countries that have kind of taken root. In the United States, it's that China has been the cause of the loss of millions of jobs in the United States, that it plays unfairly, and there's little recognition of the fact that, you know, 10 years ago, the real measure of whether a country is open is the ratio of current account surplus to GDP. 10 years ago, it's 10%. Today, it's basically zero. But nobody wants to talk about that. When I raised it in an interview the other day, they basically said, oh, that's too complicated. I said, it's not complicated. It's the facts. It's what the IMF uses. It's what the World Bank uses. It's what we should use. So that narrative has very much taken root, and that's kind of created the policies that are so problematic in the short term. You know, China's economy is having difficulty. It's having difficulty partly for cyclical reasons and partly for structural reasons, that we've seen a shift away from supporting the private sectors to supporting the state-owned sector, and that's created some problems. So what that's left us with is a trade negotiation where both sides are dug in, but neither side really is prepared to give much. So there's a lot of pessimism.
At the conference organized by CDRF, which is their second conference of the year, you spoke in front of hundreds of audience, and many believe your speech were one of the most passionate, calling on all sides to be more optimistic and at least to work on the current challenges between China and the United States. What is backing your confidence and your passion about this?
The passion is, you know, I know I'm right. So when I know I'm right, I basically don't fear the criticism. I don't fear that I'm in a minority. I mean, Martin Luther King
what you're
says,
right about.
I'm right about what the United States and China should be doing together. I'm right that the complementary interests far outweigh the conflicting interests. I'm right that the true challenges to America and China are climate change, economic crisis, pandemics, and terrorism. And we're only going to be able to defeat those together if we continue down this path, this separate path of creating two separate economic ecosystems, two separate technology ecosystems. We're doomed to not being able to confront those issues.
Do you think there is a danger that we are on the process of decoupling? To what extent already it's happening?
Why I'm an optimist is ultimately it's the people of China and the people of the United States who are going to make the decision of what the policies are. And the true threats, what I talked about this morning, the mother in Shanghai and the mother in New York have the same fears, and they will, from the bottom up, pressure both governments to follow this policy of cooperation rather than conflict. So that's why ultimately, and I'm an optimist, it's the mother. You know, I lived through Hurricane Sandy, Superstorm Sandy. I was flooded out of my home. I know what climate change is doing, and I'm just one of millions of New Yorkers who have understood this. I saw 9/11. I saw terrorism. Many Chinese saw the terrorism in Kunming, in the Kunming train station. That is something which mothers fear for their children. And the United States and China are only going to be able to deal with this through cooperation, not conflict. We saw Ebola. We saw the threat that that posed, and it was U.S.-China cooperation that was able to defeat Ebola. And the economic crisis, if you think back to the last few economic crises, it's U.S.-China cooperation that have allowed us to defeat those crises.
But when it comes to the future, there has to be a plan for the business community. There also has to be a plan for other areas of the bilateral relationship. Now, we have seen some companies try to move to other alternatives rather than China. What are the alternatives? What kind of plan should they have? Also, what kind of plan should people have here in China who wants to send their children to study in the United States, or the American young people who are fascinated about the climate change issue and think about cooperation between China and the United States? What are the plans they should have?
It depends what business you're in. If you're in China for China, you stay here. Most U.S. investments in China are for supplying the Chinese market. If you're a textile manufacturer or you're a toy manufacturer and these tariffs are really hurting, then you're probably going to have to move to Vietnam, Cambodia, Sri Lanka, one of these places. But you know what? In the next 5 to 10 years, you were going to move anyhow. That Chinese labor costs and other costs were going up so much that China was going to have to migrate up the value chain anyhow. So what's going on here is American tariffs are speeding up the necessity for China to move up the value chain. But if you're a chip manufacturer that's supplying, companies in China, and the American government is allowing you to do it, you're not going to move. You're not going to put your fab in Vietnam, Cambodia, anywhere else. So it depends on what industry you're in. In terms of sending your children to the United States, the President has said it. The Assistant Secretary of State for Education has said it. Welcome to come. America is open. America welcomes Chinese students. They make an enormous contribution to American society, and they make an enormous contribution when they return to Chinese society, and they remain welcome. That door is still open, despite the somewhat more limited visas that are being issued. It's still, again, it's 360,000. Yeah. What's going to happen is the increase that has been like this, it's going to level off. It's not going to sink like this, because the American education system is the college and the university system and the graduate school system is still the best in the world. And if you want your kids to get the best education, you're still going to send them to the United States. So I think that is going to continue. But clearly, the administration's policy is going to be slowing that increase, or maybe we'll see a leveling off, or even potentially a slight decrease. But we won't see it go like that.
Before we go, final question for you, Steve. I see you on so many occasions, China or U.S., very passionate about promoting bilateral relations and very passionate about everybody working together for solutions. How could you always keep yourself upbeat about this? Besides the moment you're speaking on the podium.
You know, it's funny. I've thought about that. Why is my energy level so high now?
About this still.
About this still. Oh, even more so. That as the relationship has turned down, my energy has actually increased. And I thought about Martin Luther King's speech. It was a speech about the Promised Land. And in that, you know, he said, when it's darkest, you can see the stars. And think about that for a moment. When it's darkest, you can see the stars. So I admit, frankly, that the relationship is as dark as it's been in my 43 years of working on it. But it is because of that, because of the darkness, I can see the stars as clearly as I've ever seen them. And it is clear to me that what I have to do is work in every way I can to make this relationship productive and make sure when I leave this world that there's nothing, no stone I've left unturned, and my kids can live in a more peaceful world, and my grandchildren can live in a more peaceful world. And it has never been clearer for me than it is now.
They also say in a Chinese contemporary poem, darkness gives us the blackest eyes, and we can use that to discover bright and also light.
Always great to see you.
Thank you so much, Steve. Really appreciate it. Stephen Norton. And that is all that we have for today. If you'd like to see more, try to find us World Insight CGTN into your search engine or check out our YouTube channel. Follow us on Twitter, Facebook, and Sina Weibo. From me, Tian Wei, and everyone on the World Insight team, thanks for watching. Tune in again next time for more insights across China and around the world. Good night.